Hello everyone, I'm Dr. Swati welcoming you in the global online platform. So, our target of the 1000 most expected MCQs, okay, and we have completed over here already 225 questions, okay, and these questions are really basic and really important because most of the time what happened, we have just ignore our basic concept, okay, so just focus on this basic concept. This basic concept will build you to the advanced level, okay, and this will help you to the advanced level. And this is a part 6 we are taking, and here we are also covering the 25 most expected MCQs plus PYQs, okay, and here we are completing a entire commerce syllabus in this series, okay, and we are taking the super fast revision of all the entire syllabus of the commerce, okay. So without delay, let's start. Before I'm starting the session, I will announce you that our new session will be starting from the 10th of the May. Here you will get complete course on the commerce and management, daily live lectures, recorded lectures, complete syllabus notes with PDF format, and the full syllabus mock test is available. Daily and more than 4,000 MCQ series we have taken in this session, and the PYQs with explanation and complete paper 1 is free of cost for you if you register yourself for the paper 2, and global online provide you the 20% discount on the fees. So that is in this 8,000, if you register yourself for the paper 2, then the paper 1 is free of cost for you. And that is the contact number is given in the screen, so get in touch with this contact number. They will help you more for the more details and more help, okay. And how to download the global online? So global online, we just go to Google Play Store, download it, and after that register with your mobile number, and after that go to my course, and then select the what the courses do you want. And once you register, you will get all the material in the proper systematic unit wise folder, okay. And here you will get a recorded videos material in a very systematic way, so you can do your study very well. So let's start without delaying. Question number 26 is that the maximum amount of the deduction of the entertainment allowances to government employee is option number A 5,000, B 7,500, C 1/5 of the salary, and D not at all, okay. So that the entertainment allowances is going to be provided only and only to the government employee, okay. And this is this is allowances is allotted to, is not allotted to the non government, or deduction, okay. Deduction of the in this allowances is not not uh, allowed to the non government employee, clear. So, for the government employee, how maximum amount they can deduct from the for the entertainment allowance. So, for the entertainment allowance, the option number 1, that is 5,000. 5,000 is a maximum amount that they can deduct from their amount, and this deduction, the entertainment allowance deduction, is exemption. Actually, it's a entertainment allowance is an exemption, okay. And this exemption is given in the section 6(2), okay, section 6(2). And here there is a limit, that is either they have a 20% of their gross salary, okay, and in which they exclude all the allowances, benefits, and the perks, and either the actual entertainment allowance what they paid, okay, actual entertainment allowance they paid, okay, they paid, and the 5,000 and rupees 5,000. So whichever is less, it is the deduction amount is will be exempted from their income, okay. So the option number first, that is 5,000, clear. Now the next one, the basis of the tax under the heads of income from the house property, okay. this is going to be repeated again. I'm just going to cross it. Okay. The base of the tax under the heads of the income from the house property. The options is given: rent received, annual value, standard rent, and the municipal rate. So when we calculating the house rent, okay, which is comes under the house property. In the house property, there is comes a annual value. Okay, and in the house rent allowances, we compare the fair value fair value with municipal value. Okay, with the municipal value. After that, whatever we get the amount, okay, whichever is higher, okay, whichever is higher, so that's amount we will get. But this amount should not be greater than the standard rate, okay, or standard rate. And whatever the amount we will get, after that we will compare with their rent, actual rent received. And after that, whatever the amount is, we get expected rent. When we compare with the standard rate, then we get expected rent. And from that expected rent, when we deduct their actual rent, and whichever the amount is higher, then this is our gross annual value. Clear? So the house rent allowance, what is what is the base of the house rent allowance? That is a annual value. Clear? Let's move toward the next question. Okay. So the deduction, section 37(1) है. Okay, this is the 37(1). 37(1) shall be allowed for those expenditure which are of nature. Okay, so the deduction or the section under section 37(1) is allowed to the expenditure. In which expenditure the deduction is allowed? Option number 1, revenue. Option number B, capital. C, both. And D, none of the above. Okay. So what will be the right answer for the 37(1)? The revenue expenditure is allowed. Okay. What? Revenue expenditure. Clear? And the expenditures of business is having a section from the 30 to 36. Okay. And in 37, there is there's a deduction of the revenue. Clear? Next question. When a person reduce his total income by taking a false claim, it is a process of. It is a process of. Okay. When a person reduce his total income by making false claim, that means they actually false claim that either they showing their expenditure higher, they showing their income is low, okay, or anything with the false statement if they showing. So it is a process of tax avoidance, tax evasion, tax planning, and tax management. So you know that if they are making a false claim, and false claim means there is a tax evasion, and you know that the tax evasion is basically, it is a illegal, illegally whatever we are doing to reduce our tax. So it is comes under the tax evasion. And you know that this a tax evasion is a illegal activity in which a person avoiding to paying true tax liability. Clear? Now next question. So the B is correct answer. Okay, B is correct answer. Next question. Question number 30. Return on income is submitted under the following section. Section 138, Section 139(1), Section 142. So what will be the right answer? For the return on income, what will be the section? The section 139A. Okay, for return on income, 139A is the correct. So option number B is correct. Now, the time limit for filing a complaint before the district forum under the Consumer Protection Act 1986, whenever, Okay, so here is he is talking about the Consumer Protection Act. So if the consumer having any complaint about their product, about their services, so what is the limit is given, he can claim his he can complaint before the district forum. District forum, what is the time limit? 1 year, 2 year, 3 year, or there is a no limit. So what will be the right answer? Yes, this is the right answer. That is option number two, 2 year. They having within the 2 year, they has to raise a complaint. Okay, raise a complaint in the front of a district forum. In the front of district forum. Okay, so this is the really much time they have giving, and if the condition is allowed as per the product durability and the warranty and the guarantee. Okay, next, who propounded the word privatization. So, who propounded the word privatization? Mayon, Elton Mayon, F.W. Taylor, uh, Urwick, or the Peter Drucker. So, for the privatization, the Peter Drucker. Okay, privatization for the Peter Drucker. And what is a privatization? Is a process of transferring of the ownership or the management of an enterprises from the public sector to private. Okay, to private sector. Okay, and that's why it helps to increase the size and the dynamize the private sector. Okay, so it is given by the Drucker. Okay, the next question, Jan Dhan Yojana is related to priority sector lending, financial inclusion, microfinance, non-performing asset. So what is the Jan Dhan? First of all, the Jan Dhan Yojana is announced by the Pradhan Mantri Jan Dhan Yojana, and is a financial inclusion, and it is a financial inclusion program, okay, by the government of India, and which is applicable. It's applicable to 20 to 65 years of age, okay, age group. And so the Jan Dhan Yojana is related to financial inclusion. So in which the aim of the Jan Dhan Yojana is to expand and make the affordable access to the financial services. Okay, like a bank account, like a credit, like a insurance, like a pension. So this is comes under the Jan Dhan Yojana, and this is a financial inclusion. Clear? Which act was replaced by the introduction of the Competition Act 2002? Option number 1, FERA. Option number 2, POTO. Option number 3, MRTP Act, and the POS, POCSO. Okay. So the Competition Act 2002 is replaced to the, you know, that MRTP Act. Okay, and the MRTP Act is 1969. Okay, it is 1969. Clear? And FERA is replaced to FEMA. Okay, is replaced to FEMA. The next question, withdrawal of state from the industry is called. Withdrawal of state from the industry is called modernization, liberalization, privatization, globalization. So withdrawal of state from the industry is called as privatization. What we are doing, we are withdrawing the from the industry. What we withdraw from the industry, we withdraw the public sector and we convert it into the private sector. Okay, so this is a withdrawal of the state of from the industry. So it is a privatization. Next question, special economic zone in India is motivated by the experience of. Okay, so the special economic zone, SEZ. Okay, so SEZ is is introduced is in India, and what are the from where from which country this motivation, the special economic zone, this is motivated by the which country? China, Japan, USA, Germany. So you know that, yes, it is from the China. Okay. And the special economic zone is located within the country on the boundaries of the nation. Okay. And the what is the aim of the special economic zone? It's aim to increasing the trade balance. Okay. Trade balance, employment, increase in investment, job creation, and effective administration, so that the creation of the special economic zone by the most country can be motivated by the desire to attract the FDI, foreign direct investment. Okay, so the special economic zone, it's also useful for the attracting the foreign direct investment. Okay, so the option number one from the China. Next question, what does 3Ps initiative refers to? You know that 3Ps initiative is a public policy paper, public private partnership, private procurement policy, and the personal production proposal. So you know that the 3Ps initiate for the public, private, and the partnerships coordination. Okay, coordination, clear. Next question, when was the first industrial policy resolution formulated in India? So it is a is the this the industrial policy resolution. The firstly is formulated in India in option number A 1947, 1956, 1949, and option number D 1915. So in that, this is the first industrial policy. So it is 1947. Okay. So it is a 1947. So things we have to discuss in this, that is in 19 what has happened in 1956. 1956 is for the IPR, that means industrial policy resolution. Okay, is also enacted in the 1956, and this resolution developed by the Indian Parliament in April 1956. Yes. And in this 1956, this is the second act of this act of the India Industrial Policy Resolution 1947. So in this 1956 policy, this continue to constitute the basic economic policy for a long time. Okay, just a second. The option is in 1947 is not correct. It is a 1956. Okay, the 1956 is the first industrial policy resolution. Clear? The next question, which of the following is a type of efficiency ratio? Debt equity ratio, current ratio, working capital turnover ratio, net profit ratio. So here the debt equity ratio. So what will be the right answer for this? You know what is the efficiency ratio? So efficiency, how do we calculate the efficiency? So for calculating efficiency, we need a capital. Okay, in the basis of capital we can calculate our efficiency. So the working capital, which capital? Working capital turnover ratio is calculated by dividing the average amount of working capital divided with the net annual sale. Okay, And the current asset minimize, and how do we get to the working capital? Current asset minus current liability. And during the 12-month period, okay, that the working capital is having the capital of less than 1 year, okay. So the option number C, that is working capital turnover, is the right answer. Next question. When fixed cost is 7,000, profit is 3,000, sale is 50,000, then PV ratio will be. So let's calculate it. You know that what is the formula of the PV ratio? The PV ratio formula is contribution divided by sale multiplied by 100, madam. Okay. So when we elaborate it, so we are the contribution is, so sales minus variable cost is a contribution, and from the contribution when we deduct the our fixed cost, then we will get a profit. So can I say the contribution is a sales minus variable cost, sales minus variable cost, and divided by the sales multiplied by 100. Okay. So what the data we have already given, that is fixed cost and the profit and the sale. Okay. So in this formula, there is no fixed cost, there is no profit for formula. So what we do over here, we do the, you know that if I'm just giving the example to you. Okay. Is suppose it here is an 100 is a sales. Okay, variable cost is 20. Then we'll get contribution is 60. Okay, and then in this 60 we have the fixed cost of rupees 40. So we will get 20. So you know that this contribution is 60, and in this fixed cost when we add a profit, so we also is equals to the contribution. That's why can I write contribution is a fixed cost plus profit? Okay. So in the contribution place, can I put fixed cost plus profit? Yes, ma'am. So the fixed cost plus profit divided by the sales multiplied by 100. So the fixed cost is 7,000. Profit is 3,000. Okay. Here is sale is 50,000. So it's multiplied by 100. So there is a 10,000 near 50,000. Okay. So when we calculate it, we will get the answer of 20,000. Okay. Sorry, 20%. So what will be the right answer? The option number B, 20%. Clear? Next. Higher the ratio, more favorable. Higher the ratio, more favorable it is. This does not apply to. So here is higher the ratio, that is more favorable. The things is were more favorable. Net profit ratio, yes, the net profit ratio is higher, so the it is favorable to. And the stock turnover ratio, operating ratio, and none of the above. So sorry. The net profit ratio, if the net profit ratio is higher, so the company is saying that there is a favorable because our profit is increasing. What is about the stock turnover ratio? Stock turnover ratio is a cost of goods sold divided by the sale. So the it is if it is higher, so it is also favorable in the company. What about the operating ratio? Operating ratio is related to the to here the expenses, operating expenses divided by the sales. So here the expense, if it is higher, so it is assumed that the expenses is greater than our sales. Okay. So this is unfavorable. So that's why it do not apply to the operating ratio. Next question. In accounting, profit prior to incorporation is treated as capital reserve, revenue reserve, secret reserve, or the general reserve. What about the capital profit prior to incorporation? The prior to incorporation, if a company earn any kind of accounting profit, if they serve the that profit like their capital reserve, because they're reserving that profit to for their capital making, and this is an account that equity section of the balance sheet, and this can be used for contingents, okay, whatever the in case of any offset of the capital losses. So that's why we move the any in the accounting profit prior to incorporation to the capital reserve. Clear? Next question, old profit sharing ratio minus new profit sharing ratio is equals to, when we from the old profit sharing ratio, we will deduct the new profit sharing ratio. So what happened? So what happened? This is old when compare with the new. There is an when it is happened, when they having it is a sacrificing, when the partner sacrificing. Okay, in that case, the old per ratio is minus new ratio. It is a sacrificing ratio. Okay, so the option number C is correct over here. Next question, in the cash flow from the financial activity is included. Option number 1, issue of share capital. B, individual dividend received. C, transfer to reserve. D, capital paid employed. So here the cash flow from business activity, okay, the cash flow business activity is a section of the company's cash flow statement. Okay, and these statements show the net flow of cash, and which is they are used to fund the company. Okay, so financial activity including involves, we can see your financial activity with the with the issue of share capital, how much they are issuing. So this is issuing share capital, it is a financial activity. Dividend receiving is not a financial activity. Okay, it's a investment activity. When you are invested, then you will get, then you will receive the dividend. Okay, transfer of the reserve is also not a financial activity, and the cash paid to employees, it's a operating activity. Okay, transfer to general reserve is also an operating activity. Clear? So the option number A is correct over here. A is correct. Clear? The next question, among which of the following item will result in the flow of the fund? A, credit sale of a building. B, issue of bonus share. C, goodwill written off. D, transfer of profit to general reserve. So what will be the right answer? You know that the item will result the flow of a fund. So how do we get that? The credit sale of the building. So in the credit sale of the building, we can see there is an source of the fund. Okay, there is a relationship with the what current asset and the non current asset. There is a relationship between the current asset that means a cash. Okay, non-current asset that means a building. Okay, so whenever you see the relationship of the current asset with having the same with the current non-current asset, so in that case this is the flow of fund. Here you can see the flow of fund. Then the issue of the bonus share. In the issue of the bonus share, the company there is a non-current liability. Okay, but there is another effect. There is no such case of, because the issue of the bonus share is issued by the within the company, so there is no cash issue. So that's why the issue of bonus share is not comes under the flow of fund. Then the goodwill written off is also the actually the amount, the current asset is not deducted. We are just estimating that the goodwill going to be written off. So that's why there is no specific transaction. And the transfer of the profit to the general reserve, we are just transferring the profit from one place to another place. So that's why this also option is not a flow of fund. So option number A is a flow of fund. Okay, credit sale of building. Now the next question, premium received on issue of share can be used for. Option number A, payment of dividend. Option number B, return of preliminary expenses. Option number C, payment of the director fees. Option number D, redemption of debenture. So what will be the right answer? The right answer is option number B, that is return of preliminary expenses. Because premium received on issue of share, it will be written off from the preliminary expenses. Okay. So here the security premium account can be used for return of the preliminary expenses of the company. Okay. And for return of the expenses of issue of share and debenture, such commission paid or the discount given on the issue of share, the share. Okay. So the that's why the premium received on issue of share will be written off from the preliminary expenses. Clear? The next question, that is, in comparison to perfect competition firm, a monopolist competition firm. Option number A is similar in size, B produce a differential product, and C has a more freedom for entry and exit, and D spend more on advertisement. Fourth one, product differentiation product. Option number B is correct over here, because when we compare the perfect competition firm, a monopolistic competition is having there is a differentiation, that in the perfect competition there is a homogeneity in the product. Okay, in the homogeneity in product, and okay, homogeneity in product, and in the monopolist competition there is a product differentiation, like a mobile. Okay, so mobile, we use a mobile for the one purpose, either we use the internet in the use of you do study in the YouTube channel, or either for the call, but there is a different products available in the market. Okay, so this is what, this is according to their price, according to their quantity, according to your standard, according to the brand. Okay, and so in this way, so there is a, in the monopolistic competition there is a product differentiation. Clear? And there is a heterogeneous product. One more thing, that is a heterogeneous heterogeneous product. Clear? Next question, in which of the following area indifference curve is not used? Where we do not use indifference curve? Consumer equilibrium we use in indifference curve, producer equilibrium in the fixed of exchange, in the fixed of substitute. So you know that the in the consumer equilibrium we use indifference curve. Okay, for the producer we use indifference curve equilibrium. Okay, in the field of exchange we also use indifference curve. Okay, but in the field of substitute, because in this case of substitute there is a positive relation between the substitute. If the price of the one increases, okay, so the quantity of the another is decreases. Okay, so there is a positive relation, there is a negative. Okay, so negative relationship, and this is not applicable in the indifference curve, because indifference curve is showing the combination of the two goods that give the consumer equal level of satisfaction. Okay, of their utility, and each point in the indifference curve indicate. Okay, if this is an indifference curve, okay, so the each point in the indifference curve is indicate the consumer is the different between, there is an indifference between the, there is an indifference between two and all the point given by him in the same utility. Clear? So the option number D, option number D is correct. The next one, the equilibrium level of output for pure monopolist is where in equilibrium level, na? Equilibrium in the pure monopolies. In the equilibrium point, you know that where is an equilibrium, the equals to signs is comes. So the where option number one, MR is equals to MC, MR is less than the MC, P is less than the AC, and MR is greater than the MC. Okay, so what will be the right answer for the equilibrium? It is option number A, MR is equals to MC. Clear? And you know, in the what is the meaning of that here, where the MR is equals to the MC. If I draw it, okay, if the MR marginal, second, okay, this is marginal revenue is the MR, okay, is equals to the MC curve goes like this. Okay, this is an MC curve. So with the point they are equilibrium, these equilibrium point to show the profit will be maximum in this point. Okay, will be maximum in this point. This point the profit is maximum, and beyond this point the producer will stop producing, and after this point, beyond this point, this area, so what happened in this area, the producer stop producing the goods, because this is a maximum profit which he has earned. Okay, so beyond this point he stopped the producing. So the option number A is correct here. Then the fifth question, the nature of the business economic is perspective, descriptive, of the positive sense, and all of the above. So the nature of business economics is a perspective, because it gives the perception, okay, rather than the description. So in the economic theory, we build a law, like such a law of demand, okay, law of a diminishing marginal utility, okay, and a diminishing return, law of diminishing return. And in this business economic we apply this law for policy planning at a level of the firm. So the option number A is correct, that is business economics is a perspective in nature. So thank you so much, we have completed over here 25 question. Let's meet you soon, and do prepare well for your examination.